All right, Bruce, back at ya. There's something to fix when I jump in. So we're doing GDXY. I owe you guys this one. Been a little boring. No shares bought. You know, they had rolled a day early, if you recall, on 621. They wrote 621s on 613. And so they haven't done any trades since then. That's one of the reasons I didn't rush something out. When they do trades and they put on new positions and it affects the payout, I'll always get one out. But if I have a choice of leaving one behind, it'll be one that didn't have any new money coming in, so they're still sitting on 325,000 shares, right? We're still doing well in the fund. It's just kind of ho-hum. I know what these are like when they run, and that's the reason I initially bought, and I'm really waiting for that. So I'm not loading up more until I see, but I have a decent position. So let's get into what else. So let's review how those are progressing, the calls that they're already in. So when we look at the weeklies, we see that with this move up to 3370 and pre-market is showing us around 3402 by 3409 with, 30 minutes to the market open. So remember, I was saying the end of last week or up to 2 weeks, and maybe this is the beginning. Let's see. 36 is a real, if we can get to 36, and that's a super breakout. But we've got some of our calls at 34. So we don't want to run too far, but then again, if we run up and we really take off, I'll accept it in a 34.50 because you lose a little on the weeklies and you gain a lot on the synthetic. So let's take a look at holdings. And in our holdings, we're moving up. We have a 713,000 loss. But we've had a 765 and 803 and a 657 going back, right? This number needs to be updated. 29 is where we should be at, 29. And this number needs, I think I need to adjust one little thing here. I need to adjust this number, net assets, 602,533.8. Roll that down, and that'll tell me what the calculated NAV is here. They're showing 1854, so we're selling at a 2-cent discount. No shares. The good news here, so we've captured now 27%, right? We collected 25 grand. I can go back and look at the number, but obviously we're 27% lower than the number. So we got 25, we could buy it back for 18, so we could keep 7,000. But obviously, if we stay before 34, we capture all that. And on this one, since it's a little bit higher at 34.5, we could buy it back for 8. We collected almost 15, so it's 44%. So collectively, we collected 40,000 and we could buy it back for 26, so we would have netted 14. Obviously, we want to capture all 40. But if it really starts to run, then we make it up on this synthetic, right? So it's a loss here, but a gain there. But that sets us up for, and then next week, we could really write further out. And as we keep going, we don't get burned on the weeklies, and we continue to make good money on the synthetic. So that's what you want when you get breakouts. Let's see if there's really anything else that I didn't cover. I don't think so. I'm trying to make these faster and get to the point, but also teach you guys that don't know. So let's take this weekly here. Let me clean that up. So where are we? I just went through that. So we've collected, what, 34%? That's what on these. Oh, they tell us better on, well, yeah, 33.7, so call it 34 on those guys. This is the only one that we're getting close to, right? But if it's not really going to break out, then it could go 34, 34.50 today, 34.80, and, you know, come back down to 34, and they should buy these back for 8 or 10 cents, and we keep all the money on our 34.50s. So again, it's just, do we get a true directional change, or are we still just going back and forth in this downtrending bull flag channel? That's why I was saying you want to get up to 35, you want to break 36, and you want to run. And it'll happen. It's just how far does the bull flag continue to extend down before it breaks out? And I wish I knew better. Okay, so back to payouts. So that's correct. No new shares bought. I told you that. So if I look at this right now, I see $1.07 was collected all together. So 34 cents was in our short calls, and we collected a full dollar altogether in May, and probably even had a little bit of April in it. And then we come along, that's not true. It was the latter part of May, and then we had the whole full month of June, and now we're gonna make a payment in early July. So take back what I said on that. So altogether, we got $1.55 so far. Now again, we could lose a little bit of this if we run by the 34. And all that does is running by it is start to bring that $700,000 loss, right? So altogether, this is our net income so far. It's like $454. We've got a 703 loss on the books. That's good till 721. So that's really not a problem, right? 719, sorry, the 621 was the 6th expiration month. So we got 29 days to expiration there. So if I had to say, and again, they got 2 more weeks to collect the weeklies. If we don't break out and we hang around this range, then we're going to have, you know, $1.80. We could have close to $2 in collected income. It's a new fund. It's its first payment. Based on their track record, it's probably $1 payment. But maybe they pay us $1.10 on a low IV, right? These precious metals, when they're not running, they're boring. They're the most hated asset class there is, but they're also the most undervalued. And I definitely see gold wakening up in this war cycle. I see the stagflation. I see the requirement for, you know, all of the metals that are used in the industry, and then gold is sort of a store of wealth and a factor. I tell you, if these skirmishes get any more, if the Europe implodes, if Taiwan were to ever actually see Chinese landings there, gold would go through the roof. So I think there's a lot of factors that people don't trust the paper money. So I rode this cycle. I know what it's like from 2001 to 2011. And when it gets running, it's pretty exciting. So, and it make the markets look tame. You're probably looking at a 4x to a 6x. Certainly a 4 or 5x on the large cap miners. Some of these juniors and other ones can get a 10 to 50 times. And so that drives these indexes up. All it takes is, a double in the metal price, and these miners explode, 4x. So we'll see that eventually. It just has to get going. So that's what I got for you. Looking at $1 to, $1.10. Unless something unforeseen happens. And that's pretty good on a 30 IV. Now, if they come back and pay us 60 or 70 cents, that's a crying shame. They're going to hurt themselves. With no shares being bought, nobody's going to buy this fund. When the miners run, they'll buy it, but nobody will buy it now. So they need to be aware of that. They need to get to, I don't know what their magic number is, but it's in the millions. for these funds to keep a fund and to sustain it, because they're taking a management fee of 1%, you know, across that many shares. They're not in the game for, you know, 500,000 shares. So we'll be fine. This is all going to happen. I see it coming. Okay, that's what I got for you. Again, this is Bruce. It's not financial advice. I'm not a financial advisor. It's for fun and entertainment, and hope you were entertained. Talk to you. Bye.